3, 2, 1. Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel free to join in, and of course, if you have any questions, type that in the live comment section, and I'll be responding to that right away. So as you all know, today is Tuesday. We are dealing with a market that was extremely volatile last week. Following a couple large quiet on Monday, we didn't have much of a move. We are basically seeing volatility resuming in the markets, with a major highlight being the dollar index making an impressive recovery against last week's sell-off. So this afternoon, we don't have much news happening in the markets, so a majority of the focus will be on technical analysis and try to identify some price patterns, price action patterns, as well as potential trading opportunities. So good afternoon, Caspar, and thank you for joining the session. So let's get things going. So first things first, if you've just joined, you should know that we normally do a morning session called a Market Snapshot series every day at 11 a.m. Through to 11:30, where we discuss the key events for the day, key market opportunities, and then using that, you're able to identify potential trading setups for everyone, and hopefully we get to provide value. So in the morning session, we went through some of these charts, and now we are looking at the progress and trying to understand how we may see the markets reacting as we enter into the New York session. So the chart we are looking at right now is a chart of gold. It has been trading quite well after having traded within this channel during the second half of October. And now, as we get into the new month of November, what we are basically seeing is a gold basically failing to form higher highs. So from this sequence of highs, from this to this and then this, it was quite illuminating, basically saying that the market is no longer able to form higher highs. So eventually, it was the first sign of weakness, and then eventually it broke the lower trend line yesterday, and then continued to rally further downwards. So from this morning's projections, we were expecting that gold would continue selling off. Eventually, it would get to this bottom here. And the bottom here is a price level of around 1953. So the setup is playing well as expected and continuing to drop even further. But then it's also important to check on our past price history to see other potential target areas. And in this case, what I'm looking at here is a target that was serving as a bottom and then also as a top some time back here. So it becomes quite an important level for any gold trader out there, 1953 price level. But then if we happen to breach that, there's also another level that was acting as a top here. And this is the 1946 price level, also acting as a top here. The chart, you'll notice that these are the most significant levels in the chart of gold as for today. So if price happens to continue moving in that direction, then the overall expectation at least retest the 1953 price level. And if there's a break below that, go to 1946. So that is just about target clear for momentum is something to take advantage of. So besides this momentum in gold, it's also important to understand the price action that is currently happening with the dollar index, having bottomed and the price level down at around this price level. So this is 104.655. So after bottoming here, there was a strong, then today has been straightforward. The dollar has just been gaining So I slightly lost my connection for quite a period, but now I'm back. So kindly confirm that you can hear me clearly. A good question here from Malombe. Do you think the dollar will sell off again? I don't think the dollar will sell off again. The commentary we have been getting from FOMC members is on one side, the rate hikes are quite sufficient to continue tightening policy and basically eventually push inflation back towards the 2% target. So though the Fed has not yet achieved that, it's very confident that the current level of interest rates is sufficiently restrictive to push interest rates back to the 2% target. But then also other commentary is basically highlighting that the high interest rates are having an effect on the bonds market, where we've been experiencing relatively high bond yields. And these bond yields are basically an additional effort to tightening policy. So from what we've been seeing with the US bonds, I'll try and search this quickly. So these are quick search from a MarketWatch website. And I want to show you the bond yields on US treasuries. So from the shortest, which is the 1 month treasury bill, you can easily observe that it's yielding 5.38%, which is quite an attractive reward. Then from 3 months, 5.43, 6 month treasury 5.48, 1 year 5.41, 2 year 4.93, 3 year 4.72, 5 year 4.57, 7 years 4.62, and of course the 30-year bond is yielding 4.78%. So this is quite an attractive return on investment. And of course, if you check the UK 10-year gilt, it's a 4.30, which is significantly lower than the US, basically implying that the US bonds are quite attractive as we speak right now. So with US yields being relatively high, it basically is attracting a lot of capital to the US. So a lot of institutions, banking institutions, financial institutions, as well as individuals and corporations are looking at these yields and finding them to be very attractive. So if you're running away from risk, let's say you're running away from risk, especially in, let's say, Germany, Japan, the Middle East, you basically buy the dollar and then use the dollar to buy these treasuries. And then you get to take advantage of the free return from these relatively low risk investments. And this is basically US treasuries. So among all traditional financial instruments, US bonds are deemed to be the one asset with the lowest risk. So when investors park money in these, they are looking at a much lower return, but at the same time, they don't expect to be having any significant risk. So from what we are seeing, it's a big migration and very high demand for these treasuries, leading to higher yields. And this is basically leading to policy tightening. So tightening is basically removing excess liquidity from the markets. And if more people are incentivized to invest in these bills, then there's less supply of dollars, which basically leads to a stronger dollar against other currencies. So this may explain why we are seeing the dollar index being relatively strong. So last week, we experienced quite a big sell-off in the dollar index, and this happened in a sequence of 3 days, Wednesday, Thursday, and Friday. The dollar index, this is the dollar losing against the yen, but then for the dollar index, this is where we have. So Wednesday, Thursday, and Friday, the dollar index was largely losing, basically dropping from 106.945 all the way down to 104.655. But then on Monday, which is yesterday, there was a strong bottom and the dollar started recovering in the afternoon and continued throughout the day today. And as we enter the New York session, there's a good likelihood that the dollar will continue recovering against other currencies. So with this recovery, it's basically the market accepting the fact that US interest rates are high, bond yields are still lucrative, and capital will continue flowing into US Treasuries, basically leading to more and more dollar scarcity. So knowing this and then comparing this with other currencies, then there's this expectation that the dollar will continue gaining. And as you can see, the pound was pretty strong last week. Then from yesterday afternoon and today, we are seeing the dollar continuing to strengthen against the pound. So our immediate target in the morning was 1.22848. And now you can see the market stalling around this area because it was working as a major resistance point and now turned into a support level after price broke above that. So in this case, the idea is to observe the key price level. So this high here is 1.22848. So to observe and see if there's evidence of the market breaking below this, because that would push our target to the next level, which is slightly lower. And now we start focusing on this other area, which was acting as resistance. And now it may become the next support. So if price manages to cruise through this area, then our next target will become 1.22155. So as for USD JPY, which has been the most bullish pair for the day, what we are observing here is a very strong recovery yesterday and a continuation of the same today. And the market has gotten to a certain price level that seems to be working as a major resistance point that was tested a couple of days in the past. So here it was working as a very strong resistance, and also here. So if we cruise through this area, then we get to the extreme top, which is 150.769. So there's still more room for upside in USD JPY currency pair. So there's a good likelihood we will be seeing the market retesting this area here. So key price level to observe is 150.769. So on the Euro USD front, it's basically a bullish channel where the market has been making swings up and down. So last week, it was a pretty strong swing down from 1.05322 all the way up to 1.07570. So around this area here. But then once the market got to this area, there was a very strong reversal, which basically started yesterday and today has only been accelerating downwards. However, the very first stage of a target has already been attained. So if you observe this area here, you notice it had a couple of days where it was serving as the resistance, and today it's acting as the support. So today is about observing this price level to see if there's any signs of a break. So we already broke this area here, which was 1.06840. And now the market retested this area, 1.06652. So if the dollar continues being very strong, especially in the New York session, then we will be observing 1.06652 as the key entry level. And then if the market cruises below, then we can target lower prices all the way down to 1.05978. So in this case, it's a matter of wait and see. Market attempting to bounce from here. So far, it seems to be failing. So we see if there's evidence of the market getting back down here, and then we trade back downwards towards this area, basically betting on a very strong dollar. So as for USD CAD, we know that the Canadian dollar has been quite resilient, but then the dollar has been the stronger currency. So our major target was here on this resistance, which is 1.37347. So the market cruised above that area this morning, moving all the way up, but now it's coming back to retest the area. And now we start observing for signs of either bullish or bearish entry. So personally, I expect the dollar to continue being strong for the day. So if there's a strong bounce from this level and the market heads higher, then that would be a nice opportunity to trade higher towards the next level, which is 1.37829. So if I zoom out my chart, you'll notice that the new target here is an area that was acting as the resistance before. So as the market basically tests this area, if there's a strong bounce, we head higher and get to this point, basically betting on a continuation of the strong dollar. So we have already checked on gold, and the target is quite clear, 1953 and of course 1946. Then for Audi USD, which had news this morning, basically the Reserve Bank of Australia hiking interest rates by 25 basis points and moving Australian interest rates to 4.35%. So the interest rates in Australia are still significantly low, lower than the expectation. Remember, the expectation is for any economy to at least have a much higher yield compared to the US, but then for a smaller economy like Australia, at a low. So with interest rates at 4.35% and the US interest rates at a higher band of 5.5%, then you can see there's quite a significant difference. So despite the Reserve Bank of Australia hiking interest rates, the AUD-USD currency pair is still attracting more capital to the US than to Australia. So as a result of this, we are seeing the strong bounce that happened here, where the market was rising, broke the upper trend line, got to the top of the pattern, and immediately faced a reversal. So from this reversal, what we are seeing is almost a V-shaped inverted V, where we are seeing the market reversing just the same way it came. So the potential for the market retesting here is still there. So we could be seeing the market jumping higher and getting to 0.64437. But then the overall idea is that the market retests this major support, which was acting as the resistance previously, around 0.63884. So I expect some further continuation in this pair, eventually getting us to this target area of 0.63884. Then for the US equity indices, I think this is the most challenging one because the markets are basically pricing in this possibility that the Fed may have reached the end of rate hikes after freezing rates for the last two meetings. So in the last two meetings, the Fed decided to hold the interest rates level at 5.50%. But then we are getting conflicting signals from major Fed speakers who have been speaking over the week. So looking at the economic calendar, we had a couple of speeches yesterday. One of them was a FOMC member Kashkari, and the other one was from FOMC member Cook. So from FOMC member Cook, she basically said that interest rates have moved to a significantly sufficient level to be restrictive enough and lead to inflation dropping back towards the 2% target. On the other hand, Kashkari had opposing views. He felt that the markets needed another rate hike, which would push US interest rates to 5.75%. And at that level, maybe it will be restrictive enough to get inflation back on track towards the 2% target. So two Fed members having two opposing views about the interest rates was quite confusing, and this basically stalled the rally, and the market did not move much. So we are seeing equities markets moving sideways, but then we could be getting more air as more Fed members comment later in the day. So as I mentioned early in the morning, we have 5 Fed members speaking today. So from 3:30 p.m., we already have this from Kashkari. I believe this has already passed. This from Goolsbee. It was starting as I was starting this webinar. Then FOMC member Barr at 5:15 p.m. and of course Waller at 6 p.m. So later on, we'll be having one more speech from FOMC member Lohan, and this will be at 9:25 p.m. And the corrective thoughts about these FOMC members will be very important in determining market sentiment. So as per now, the overall expectation, especially from my own opinion and analysis, is that in this case, the market has stalled and the potential for the market reversing is significantly high, especially considering the last 4 times that the market got to this trend line. So as you can see, right from the top that we saw here in July, every time the market has gotten closer to this area, it has subsequently led to a big sell-off in US equity indices. And in this case, we are basically focusing on the NASDAQ index. So in this case, clearly the market attempting to retest the area several times. So after this diamond formation, the market is attempting to move higher. So if I was to adjust my trend line to accommodate this, we would significantly have this belief that the market has already broken towards the upper side. But then in this case, even if it breaks to the upper side, there's quite a significant resistance, either at the top here or at the upper trend line. And of course, the upper trend line is not far off. So if I move to a higher time frame, the H1 time, then you can see that this is the upper trend line, the blue line here, which coincides with the top of the diamond here. So perhaps the market is looking to retest that area, and then we'll see our much waited for sell-off. So we don't have any evidence of sellers entering this market, especially on the 1-hour chart. So that's what we are waiting for. And once we have the evidence, then maybe the idea to go for short selling positions will be more viable. As per now, the market is moving higher. So until you have that confirmation, it doesn't really make any sense to go for short selling positions yet. So it's a matter of wait and see, be patient and wait for the right moment. So for the Dow Jones, it's largely a consolidation, the market just moving up and down since yesterday. So we should be waiting to see some form of consolidation and evidence of a breakout, or basically evidence of bulls or bears entering the market. So for the S&P 500, it's the same thing, an overall consolidation since yesterday. We don't have any major moves, but then after we enter the New York session, so we only have 9 minutes from now, and once we get the volatility coming into the market, then perhaps that will decide a direction for us. So for us, we monitor these two trend lines. If there's a break higher, we go long, a break lower, we go short, but the idea is to collectively, over time, be patient and wait for the short selling signal, which seems to be having the higher material impact. For instance, if you had shorted here, then the return would be much higher if you held that position much lower. So in this case, since we are approaching the end of the upswing, if there's a reversal, then that would be much more welcome. So Brent oil prices are on a big sell-off, currently hitting $83.168 per barrel, basically retesting a low that we last saw about 5 weeks ago. So in this case, we are basically seeing economic data coming in from China, which was relatively weak. So if you look at the economic calendar and then you see the Chinese data that came in this morning, then it would make more sense. So Chinese trade balance came at 405 billion yuan, and this was way lower than 559 billion yuan the previous month. And of course, if you look at the projections of 596 billion, it was lower. So in dollar denominated terms, the trade balance was $56.5 billion, which was way lower than the previous number of 77.7, and of course, lower than the projections, meaning that the Chinese economy is slowing down, which leads to the analysis that with a weaker Chinese economy, then there's weaker oil demand, leading to much lower prices. So I hope that makes sense for everyone. And lastly, we look at European equity indices. So for these ones, they haven't been able to hold onto the gains that were made last week. So from the French 40 index, there's a big sell-off right from Friday, Monday, and Tuesday, and I expect some further downside momentum. Of course, the target remains the previous highs that we observed a couple of weeks ago. So the potential for the French 40 index to continue dropping is still significantly high, and we could be seeing price retesting this area here. But then it's also important to identify that this area might be stalling as a result of the previous support. So this area was acting as a previous support, and now the market is having a difficulty closing through this area. But then if there's a break, then the new target becomes 6,911. So Euro 50 cash index, or the Euro stocks, is relatively moving further back downwards. So the big sell-off happened yesterday. Today, it seems to be staggering to move even lower. But then the target remains the same, a previous support area here. And this is 4,109. So there's that potential that the Euro stocks will continue selling off, and we could be seeing the price retesting this area of 4,109. Then we have the Chinese yuan. So the dollar is making quite a strong comeback or recovery from last week's sell-off. And of course, the immediate target is these bottoms here, which were acting as support. And now if the market keeps going up, then it could get to this resistance, which is around 7.30408. So as for other major currencies, such as the New Zealand USD, we are seeing a strong correlation with what we saw with Audi USD. So potential for some further sell-off happening in New Zealand USD could get the price back down to 0.58931. So price seems to be stalling around these previous highs, which were acting as resistance. They tend to be offering some form of support, but price seems persistent enough, and we could be getting the price of 0.58931 sooner than later. So as for USD CHF, or the dollar trading against the Swiss franc, we are seeing quite a strong recovery right from yesterday and then today. So the potential for some further upside remains significantly high. So if I was to clean my chart here and remove everything, then it makes more sense that with this recovery, we could be seeing some further upside. So it's important to note that some of these levels have already been broken. So this was a support level. The market has closed through it. So this was it. Then we have these bottoms here. And if the market closes above this, then we now move to the previous or most recent high, which is just here. And there's that potential that the dollar could continue running and get to the previous high of 0.90711. But then in between, there's this in between. So in this case, the potential is the market jumping from here, moving higher to 0.90466. And if the bullish momentum continues, then this may be achieved within the day or towards the opening or the Sydney session tomorrow. So that's it for the day. Thank you very much, guys. Thank you for your time. Let's see if you have any questions, and then I'll try to respond to those questions as we approach the end. So thank you for your response, Apollo. Hi, Kevin. Thank you for joining the session. There's a good comment from Wendy, and I appreciate it. Support this guy with good technology. His analysis is very good and changing lives for the better. Thank you. Sometimes, especially when I'm working from home, this is when sometimes the network can have some problems when I'm trying to stream, but it's not always. It's something that we have done for the last, 2 years, and the number of times we have had challenges is less than 5%. So, High Reach Studios, thank you. Thank you for your response and appreciate you. So awesome, guys. Tomorrow we'll be having a new episode of the Bullish Banter podcast. Make sure to check it out on our YouTube channels. And of course, if you are available and you have some time reserved for your day, we have some new videos coming up on our channel. So you might want to check out some of these. So just trying to show you a quick preview of what we have in store for you. So we've been trying to tell our story to you guys. And I believe if you go to FX Pesa channel and then click on videos, you should be able to see our most recent video. And this is a day in the life of Brenda. So you get to see the other side of FX Pesa or the team at work and what we do. So this will be quite illuminating in showing you the scale of work that we are doing on this other side. So thank you very much, guys, and I hope to see you on the next session.